Today's episode, we are going to take a look at Facebook. They just reported earnings and the company is up over 6% after hours, almost $15, sitting close to $250. So today's episode is going to be broken down into two segments. The first segment, I just want to take a quick look at the bullet points of what happened during their earnings. And then later on, we're going to take a more in-depth analysis to really look at those numbers. And two things I'm really interested to see. First, how much has the boycott really affected Facebook? And two, has there been more of a stalemate on user growth, or is growth still coming in for this company? And before we get started, guys, if you are new to my channel, if you are a long-term investor, and if you like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you all for the support, and make sure to hit the thumbs up. Like always, if you guys want to get in contact with me, YouTube comments is the best place, but I also do have a Twitter and a Discord channel, which I'm very active, and they're all free. But remember, all of this is my opinions. I am by no means a professional, so none of this should be taken as financial advice. All right, so like I mentioned, Facebook is up over 6% after hours, sitting close to $250. Next, let's take a look at some of the major bullet points that happened during this earnings. But before we get started, let me show you guys who sponsored today's video. Today's episode is sponsored by my friends at 7 Investing, where every month they provide their top 7 stock market recommendations for only $17 a month. I think they do excellent work, so make sure to check them out. I have posted a sponsored link on my pinned comment, and I also posted a link on the description. So click there and make sure to check them out. All right, so now let's take a look at earnings results for Facebook. For quarter 2, they reported GAAP earnings per share of $1.80, which beat expectations by 40 cents. They did report revenue of $18.7 billion. That's up about 11% year over year, and that beat expectations by $1.3 billion. And that's actually pretty impressive by the beat. If it did seem like analysts were expecting this company to pretty much be somewhere near flat, if not very low single-digit growth. But Facebook was like, nope, we're coming here strong with almost 11% year-to-year growth. We're going to take a quick look at their daily active users, but they did show huge growth they did show growth in their daily active users and their monthly active users, and they both beat expectations. So we already mentioned, right, we saw both revenue and subscriber monthly active users came in ahead of expectations, one of the biggest driving force of the stock price movement going up. So out of that 11% year-to-year growth of revenue, most of it comes from ad revenue growth, which rose 10% compared to same time last year. So like I mentioned, total revenue for Facebook was about $18.7 billion. Out of that $18.7 billion, most of it comes from advertisement revenue. About $18.3 comes from it. So only about $400 million comes from the other types of revenue that Facebook has. And that other type of revenue is pretty much their Oculus Rift. And I forget the other portion that it comes, but I will mention it later on in this episode. So daily active users were up 12% compared to same time last year, and that beat expectations. Monthly active users rose 12%. And if you guys have been following Facebook, they track their actives by two methods. First, they say daily active users, and when they talk about active users, they mean just the Facebook platform. Then they also track family daily active people. When they talk about family, they talk about their 3 major platforms, which is Facebook, WhatsApp, Instagram, and Messengers. Actually, there's 4. So that's their 4. Those are the 4 major platforms that Facebook is in. And when they talk about family users, they mean those. So family daily active is up 15%, and family monthly is up 14%. So we're seeing great right now. More users are still using Facebook. And I think some people are always expecting this to go down. I remember earlier when I first started investing, I was always saying, hey, Facebook can't keep growing anymore. The amount of active users have to plateau, but no, they keep increasing. And then a lot of people during this boycott were probably saying the same thing. Hey, because of the boycott, a lot of people are not going to be subscribing, are not going to be using Facebook. But you got to remember, it's Facebook, it's Instagram, it's WhatsApp, and it's Messenger. But even outside of that, just all of Facebook was up 12% for both daily and monthly thing. And what this tells me is very bullish sentiment to the advertisement business of revenue. Because at the end of the day, when you advertise, you want to advertise to the place that has the most views. So I know right now a lot of businesses have pulled out from Facebook, but I believe showing stuff like this where Facebook is like, sure, you can pull out, but hey, look, we're still growing. Those guys are gonna come back sooner or later. They also reported that their average revenue per users came in at $7.05, which beat expectations, which was $6.63. They do expect Q3 ad revenue growth to be close to 10%, very similar to what they expected in Q2. And we're gonna and one of the major we're gonna see, right, 10% is actually the slowest that revenue from the advertisement has grown for Facebook. I actually pulled out a quick look here how revenue has grown in the past. In Q1 of last year, 26%, Q2 of last year, 27%, and Q4 of last year, 25% revenue growth, mainly because of the advertising business. This quarter, revenue only grew about 11%. So we are seeing that there is a slowdown in their growth, and they do talk about it in their earnings. We're going to see a little bit later what were some of those major headwinds that Facebook is seeing. But they are seeing for Q3 that same about 10% rate. I still think it's pretty impressive for a company like this to be growing at 10% revenue growth, even with all this headwinds that is getting from COVID to the boycotts to everything else that's happening. One more thing I wanted to check out was their future growth to see how Facebook is expected to do for the next 3 to 5 years compared to the market. So first, let's take a look at revenue growth. Facebook for the next 3 to 5 years on an annual average is expected to grow 17.3%, where the industry is only expected to grow 15.7% and the market is expected to grow 9.2%. So revenue is expected for the next 3 to 5 years to beat the overall industry and market in revenue growth. The same story can be said on earnings growth. Earnings for Facebook for the next 3 to 5 years on average is expected to grow 19.6% annually, where the industry is expected to grow 21.3% and the market is expected to grow 22.5%. Even though it's not expecting to beat the market, it is still pretty impressive that they are expected to grow their revenues on an average of 20% for the next 3 to 5 years. And actually here, I know I mentioned earlier in this episode, the other types of revenue. So the other types of revenue is up 40% compared to same times last year. And like I mentioned, that includes most of the sales from Oculus virtual reality headsets, but it also includes the Portal video chatting devices. That is that device that's trying to tackle kind of the Zoom platform. All right, so now that we took a look at some of their major points, I wanted to take a look at their earnings presentations. There was a lot of cool information here. I've highlighted, we're not going to go through the whole presentation. I've highlighted the ones I found the most useful. So let's see. All right, so the first thing I want to take a look at is we saw their family average revenue per person. And this is how much on rough how much money they collect from the users on Facebook. In Q2 of 2020, they collected about $5.98 from advertising. Same time last year was about $6.10. So we can see Facebook did take somewhat of a hit there. The other thing is now I want to take a look at Q1 of 2020. Which was last quarter, they took about $5.93 from advertisement, where Q1 of 2019 was $5.60. So Q1 this year was a lot better than Q1 last year, but Q2 this year is a bit weaker compared to Q2 of last year. And this is not any form of bearish sentiment. I just want to show you guys some of the goods and the bads that's happening within Facebook. Next, I want to show their advertising revenue geographically to see where most of the revenue is coming from for Facebook. So we can see Facebook collected about $18.3 billion of revenue. Over $9 billion come from the United States and Canada, which makes up close to 50% of the total revenue in advertisement. then we're seeing, and the first thing I want to see is, has that grown compared to the same time last year? And yes, in quarter two of 2019, it was about $8 billion. But then people there, I feel like people might be like, hey, but Jose, quarter four of 2019 is way stronger than quarter two of 2020. What's happening there? We got to take into account what's happening during quarter four of quarter four of the year. So quarter four is usually when holiday seasons are coming up. So a lot of big sales are happening. So advertisement is usually pushed in a lot stronger during that quarter. Quarter four, quarter one tends to be the weakest, and then throughout the quarters progress, they tend to get a little better. Quarter two doesn't. I guess you have the summer sales, but quarter three you start prepping for the upcoming holidays, and quarter four you want to sell everything you have, so you over advertise during quarter four. So that's why you usually see some form of cyclical type revenue here for Facebook, and that's why I like to compare year over year growth opposed to quarter to quarter growth. So we're seeing growth in United States. Next, I want to take a look in Europe. Europe this quarter was 4.4 billion compared to 4 billion last year. So we're seeing growth there. In Asia Pacific region, this quarter was 3.3 compared to a 2.9, about 3 billion last year. So another growth there. And then the rest of the world this quarter saw about 1.5 billion compared to the same time last year being 1.6 billion. So that was the only portion where they really saw a decline, and it was only about 100 million decline. Everything else compared to the same time last year saw a nice bump. The next thing I wanted to take a look at were their operating margins. And sometimes you have to dig a little bit deeper to see what's really going on. So operating margins for quarter two were about 32%. If you compare them to quarter two of 2019, you might be like, wow, that's a great improvement, because in 2019 they were about 27%. But you got to understand, they do mention here that in 2019 for quarter two they had about a $2 billion settlement fee that they had to settle, which caused the operating margins to go down. If they did not have to pay that legal expense, quarter two operating margins would have been closer to 40%. So it would have been in line to what quarter three of 2019 and quarter four of 2019 would have been. And the same thing happened in quarter one of 2019. Quarter one of 2019, you see a 22% operating margins. But quarter one of 2019, and remember, this was about a year ago, they paid about $3 billion. If they didn't have to pay that, the margins that year would have been about 40%. So one thing I'm seeing is, since quarter two of 2018 to quarter four of 2019, if you don't account legal expenses, their margins tend to be above 40%. But quarter one of 2020 and quarter two of 2020 seem to be in the low 30s. So something is affecting their operating margins, but they are below their average operating margins. And to me, the biggest impact has to be COVID-19 right now. Next thing I want to take a look at is their free cash flow for the business. For quarter two of 2020, Facebook reported a free cash flow of about $500 million. And this is much lower compared to previous quarters. To just keep you guys, just for comparison, quarter two of 2019 was about $5 billion. So what was this major impact? And it does seem like Facebook, almost on a yearly basis, tends to do something where they need to pay some form of legal fees or some form of settlements. So in quarter two of 2020, they had to pay about $5 billion for a FTC settlement. So obviously, if it wasn't for that settlement, this free cash flow would have been higher than same time last year. But this is starting to seem like once, not that much, but this is starting to see more of an often thing than not of once in a lifetime type thing, right? We saw quarter one and quarter two of 2019, they had some form of settlement. Now we see quarter two of 2020, they also have some form of settlement. So this is a risk I'm guessing many investors are taking when investing in a company like Facebook. The great thing is, something like this is usually only for one quarter, but still, it does. Seeing this last year and seeing it again this year, it's like, Facebook, can you learn not to mess things up? So, but that's like I said, we're here to take a look at both the good things and the bad things. All right, so next we're going to take a quick look at their financial documents, pretty much just their balance sheet. And after that, I just want to give my thoughts on Facebook at the moment. And here, first, like earlier in this episode, I talked that revenue growth for Facebook for Q3, they expect somewhere of a 10% growth. And even though it is a 10% growth, it is much lower than what previous years has seen for Facebook. Normally they see somewhere above their 20%, above 20% revenue growth. So what's really affecting this growth? Remember, they are still growing at a huge rate. 10% is still pretty amazing in my personal opinion. But they do mention what is affecting it. First, the overall uncertainty due to the world we're in, right? Mainly due to COVID-19, the uncertainty that's happening there. The second thing they mentioned is, yes, right now they're seeing a huge increase in engagement in their platforms. But remember, right now, a lot of people are shelter in place, are working from home. They do believe once things start to open up again, they might see a pullback on that engagement. The third thing is they do mention that they are getting some impact due to the advertising pausing due to boycotts and other things, and that's where they're seeing most of that and that's where they're seeing some of that downside as well. And the final thing, this one I thought was pretty interesting. I don't really follow, and these are things you have to understand when you invest in companies like Facebook, right? The major way Facebook makes money is through revenue, through advertisement. And one of the things that Facebook has way better than Twitter, and it is that they're able to really target their customers, their consumers, to the proper advertisement, very similar to Google. But there have been certain regulations, such as the California Consumer Privacy Act, which is kind of changing the way that advertising is done. That is also going to provide some headwinds for it. So they're taking into account all of this information and still giving a 10% revenue growth rate. So I think that is pretty impressive. All right, so now I want to take a look at their balance sheet. So first, I want to take a look, and this is comparing the end of this quarter, which ended June 30th of 2020, and comparing it to December 31st of 2019, which was 2 quarters ago, at the end of their fiscal year for 2019. So at the end of 2019, they had about $19 billion in cash. This year, right now, this quarter, they're sitting at about $21 billion, so an increase of about $2 billion there. They also have marketable securities, and that's just some form of quick investment, some form of quick, safe, not risk-free investment, but lower risk investments that they put cash just to create more interest. About 2 quarters ago, they had about $35.8 billion. Right now, they have about $37 billion. So closer to an increase of about $1 billion there. So total quick cash grew by about $3 billion. And their total quick cash equals to about $58 billion. And that is pretty impressive. They have a nice amount of cash. And this is one of my favorite things about Facebook is their balance sheet. If we take a look at total current assets, it grew to 68 billion compared to 66 billion 2 quarters ago, and that's about a 2 billion increase, mainly due to that quick cash growth. Now, if we take a look at total assets last 2 quarters ago were $133 billion compared to $139.7 billion, so a growth of about, I want to say, $6 billion. About $3 billion comes from cash, from the quick cash that we saw previously. The other $3 billion come from about an increase of property and equipment. It did seem that Facebook did did purchase more equipment. I wonder if it was any acquisitions that they did collect, or if they did acquire that other company in Q1 of 2019, I believe, of 2020. Q1 of 2020, they acquired the video chat company, and I'm pretty sure that has to deal with that property and equipment there. Next, so we did see total assets increase by about 6 billion, right? And we saw quick cash increase by about 3 billion. The last thing we want to see is total liabilities increase by the same level, right? In theory, what you want to see is total liabilities decrease, or at least if they do increase, not increase at the same numerical rate as total assets. So total liabilities has actually gone down. 2 quarters ago, they were sitting at about $32 billion of total liabilities. Right now, they're sitting at about $29 billion. So about a $3 billion decrease. And that to me is actually pretty impressive, that this company has enough quick cash to pretty much pay their total liabilities two times, and pay over their total debt two times. And that to me is a very, very healthy balance sheet, and something I am very happy to see. So Facebook earnings, so now let's take a look at my thoughts. Facebook earnings have been pretty impressive. And there's two things that don't get talked about in their earnings, because they don't, in the overall scheme of things, they don't make a big difference. But when you take a closer look at them, I think they are important things to note. The first thing I want to talk about is Facebook. They just partnered up with Microsoft for their gaming platform. With this gaming platform, they're trying to do that gaming, a stream gaming, to compete likes of YouTube gaming and Twitch. Even though it is not shown as an individual thing, products like that help bring more users to the Facebook platform. So I do think that that's helping out a lot, especially with the huge growth of the esports. More kids, more people working from home. I do believe we have seen more streamers out in the world right now. The second thing is we're seeing again, very similar to that user growth. We're seeing that user growth. So I do believe this advertising boycott has not really affected Facebook much. And by them growing their user numbers, those companies are going to come back and going to start paying Facebook again, right? They pretty much just wanted to show good face at the moment, but money talks, and they want to make sure they show their products to where the people are at. And Facebook, Instagram, WhatsApp, and all those other platforms are where the people are at right now. Another point I want to make is Facebook has a very, for small business to medium business, Facebook and Google are like the go-to places right now. They have the easier platforms, and I do believe Facebook has an easy advertisement segment compared to Google. So for more small businesses to medium businesses, in my opinion, I feel like they go more to Facebook than to Google. I still believe many of them go to Google as well, but I do believe that especially those small mom and pops places, they are really pushing on Facebook. So right now I am long Facebook, but let me give my thoughts on what I would do if I wasn't long. So if I wasn't long on Facebook, I am very bullish in the company. And if you guys don't know my portfolio, my portfolio is about 47 different companies, and right now I am beating the market very, very well. So it's not about how many positions you have, it's pretty much just how understand the type of investor you are. For Facebook, I don't have unlimited money. Unfortunately, right? I don't have unlimited money to always put into the market. I dollar cost average. So if I didn't have a position in Facebook, I am very bullish in their esports. I'm very bullish in their revenue growth. I'm very bullish on their overall growth plot of growing their users. So for Facebook, I would, if I didn't have a position, again, this is not advice and this is just my opinions, I would enter slowly but surely. And the great thing about dollar cost averaging is some days you might buy high, some days you might buy low. But remember, I am more of a long-term investor, so I'm looking more for that 5-year term growth to see, hey, where is this company gonna be in 5 years? Now with my current position, for sure, I am not gonna sell. I am not going to trim anything. And in my current position, I don't believe I will add. I'm holding on to see if there's anything else that I want to add. I have to take a closer look at my portfolio to see how much Facebook really holds, and then really determine if I want to add or not. So I hope you guys enjoyed today's episode. Like always, make sure to give the thumbs up, make sure to post in the comments. So take care, guys. Have a good night and see you next time.